going on, everyone? It's good to see me again. Cathie Wood from Ark Invest gave an interview with Yahoo Finance. She talks about some of the comments that Elon Musk has made that she actually disagrees with, and she also talks about how Gamestop and the situation that we have with the short sellers and Reddit and WallStreetBets is actually negatively affecting the bond market and how this might play out over the next few years with some of the trades that are currently visible becoming less transparent as well. So she gives some really great points that I don't think are heard on other interviews or other talk shows, and I really want to dive into that here. So we're going to watch the interview and we'll comment as it goes throughout.
So the GameStop and the let's get the hedge funds. One of the interesting things about this is they're actually aiding and abetting, and I don't think you've heard this anywhere else. They're aiding and abetting the bond bubble. What is happening? What is happening? These companies that are left for dead by innovation, by the way, are selling, some of their bonds are selling at 25 cents on the dollar. They're dead as doornails in many, even bond investors' eyes. Once you drop below 75 on a bond, 75 cents to the dollar, the risk of bankruptcy looms large. So now some of these companies are refinancing. They're actually accessing the equity markets. They're not refinancing their debt. They're right now, they will. They're accessing the equity markets, and their bond prices are skyrocketing. They're tripling. I think it was AMC. Their bond price has just gone from 25 cents to 75 cents. Now, if you ask me, a student of innovation, maybe there's a shot of survival here, and maybe more so now that they've been able to do an equity offering, which they could not have done 2 weeks ago, maybe, but I would not be putting my money there. I want to be on the right side of change. That's what ARK is all about.
So this is really interesting what Cathie is saying, and as she said, this is something that not really anyone's talking about, so let's break it down a little bit for you. All of the companies that are involved in these short squeezes are typically companies that are in financial struggles right now. So GameStop, AMC, a lot of them are potentially on the verge of bankruptcy. You can also think of it almost like Blockbuster, where they might have been too slow on the uptake, or they just weren't innovating fast enough and other people started to overtake them and their business started to struggle. But in this case, because the GameStop and AMC prices and the stock prices are going up so much, they're actually able to raise money on the market so that they can eventually then refinance their debt. So it's almost like they're getting a second life, whereas beforehand, if this short squeeze hadn't been happening, they would have continued to struggle, and if they didn't innovate, which would have been really hard at that point, then they likely would have gone bankrupt. But right now, they're almost able to get a new infusion of cash because the stock price has increased so much, and this is allowing them to have a second chance of innovation. And what Cathie's saying is the likelihood of that second chance of innovation happening is pretty low, just in the sense that it never happened before this actual short squeeze happened. So they do have another chance right now. They can refinance their loans. They might have a little bit more of a runway, but if they don't actually innovate quick or do something pretty wild and crazy to actually get more revenue and stop the cash burn, then they're still going to meet the same end that they would have met before this. So she, in her case, is going to be betting more on the companies that are actually innovating and were innovating this whole time and have a better runway and have a better future projection compared to the companies right now that it might seem like now they're in a better financial situation, but it's really just because they're taking advantage of the inefficiency in the market that's going on, and it's just basically creating this bubble in the bond market where prices are actually more inflated than they should be, and you're paying 75 cents on the dollar, where previously it was really only worth 25 cents on the dollar, and nothing's really changed there.
Do I like a two-sided market? I disagree. I agree with Elon Musk on almost everything, certainly in terms of technology. But on this point that short sellers are a negative for the market, and Ark, who were terrorized during Tesla's plunge during 2019, if you have the courage of your conviction, and our courage comes from research, back then, what did we do during that plunge when many speculators were saying they're going to run out of money? Our simple question was, how can that be? The markets have not shut down. And sure enough, they did an offering. Was it at a lower price than many of us would have liked? Sure, but it was small compared to the ones they've done recently. We bought all the way down. It was a gift for us to have those short rates.
So Cathie makes another really interesting point here. Although there's been a lot of talk about how bad short sellers are and hedge funds are, she's actually talking about how in many cases short selling and the decreasing of a stock price that might come along with it actually creates an inefficiency that people like Ark Investment or Cathie Wood can take advantage of to buy stocks that are fundamentally strong or they see high growth potential at a lower price. So in her case, when Tesla was heavily shorted and the stock price kept dropping or staying at a deflated level, they were able to continue buying as the stock went down. They were able to get a great deal or buy the stock at a discount because they saw the stock's intrinsic value actually as being higher. And in that case, a short seller helped them because they were able to take advantage of an inefficiency in the market when they had done a lot of research knowing that the value of the stock was actually higher. So although in some of these situations it can definitely be a negative when short sellers take advantage of a situation to drive a company's stock price down, put out a ton of bad news, open up investigations. In the case of Cathie Wood here, because they had done a lot of research and knew the value of a stock, they were able to actually get a better deal and get a company at a discount so that they could actually realize higher returns in the future.
Everything you're doing is based on research. And I think with these meme stocks, people are saying, well, what's the research? Like, what are they doing this on, right? These companies, you want to be on, as you said, the right side of innovation. So has this exposed, I mean, some people think it's exposed a systemic risk to free markets, and others think it's the very definition of free markets.
Yes, well,
Where does it fall?
Oh, no. Truth will win out here. And the truth is, history is not going to be on the side of those companies that didn't invest enough to move into the new world quickly enough, and probably are not going to be a big force moving forward. So one of the things that I did find interesting, I didn't know that a stock could be, or that 140% of the float of a stock could be short. That was a surprise to me. And so I think that hedge funds or whomever is shorting, it's not just hedge funds, there are all kinds of investors shorting out there. It's going to be interesting to see if they will stay or if they will move to such what I believe was an outrageous position relative to the float out there. So kind of, in a way, they might have seen this coming. And I do know that the one firm that got in trouble was I guess the Reddit folks were focused on the listed puts of the, now what's unfortunate about that is they probably don't know much about OTC puts, over-the-counter puts. Those are opaque. They can't see them.
So even though in the case of Gamestop and AMC and all the shorted stocks, although they might have been able to raise money, Cathie's saying that in the end, it's all going to come down to innovation, solid fundamentals for a business, and who can maintain growth in the future. And a company like Tesla, in her opinion, has that ability when the stock goes down and they're able to raise more money and take advantage to actually help continue growing their cash pile and growing their business. Whereas a company like GameStop, who hasn't actually been innovating, hasn't taken advantage of the technology trends that are happening, is going to struggle and have a harder time to recoup that. She's also talking and making an important point about the bond market and about how everyone's talking about how it needs to be transparent. And what actually happened with like Melvin Capital and the hedge fund is that all of their shorts were transparent because they actually were doing it on the open market or the public options market. But what's now going to start happening is if all of these hedge funds start seeing that people are going to, attempt to do short squeezes on them, and there's going to be this Reddit army behind it, then they're going to start taking their trades and their options trades on the over-the-counter market. Basically what that means, it's more of a private market where a lot of the trades or the short selling that you might be doing doesn't have to actually be visible or transparent to the market. So in those cases, a lot of what the Reddit army is trying to do in terms of exposing people that are short selling is going to be a lot harder in the future because those trades are actually hidden behind the over-the-counter market rather than being on the public market.
All this move will do is push all of that market over the counter, which is extremely profitable for banks, but it's more expensive for the end investors. So it's a little unfortunate. As an investor, I always like to hear the other side of the argument, and that's the other unfortunate thing that's going on here, I think. There are people who are now afraid to talk about why they're bearish on certain stocks. If during our Tesla 2019 experience, if we didn't have the cacophony of investors, sell side, buy side, retail, institutionals, putting down Tesla, we wouldn't have gotten the opportunities to buy it that we did, and we wouldn't have understood how much those investors did not understand what was going to move the stock. That helped us. And if their voices are shut down, I think that will be doing a disservice to all investors, because I want to know, what are the arguments against this position? Clearly, we're missing something, but we weren't when it came to Tesla.
So one more time, Cathie's just getting to the point that in her case with Tesla, when it was heavily shorted, and it still is heavily shorted, her and Ark are able to take advantage of the inefficiencies in the market. So when the stock drops to an unreasonable level, in their opinion, they're able to buy it at what they consider a discount and take advantage of that to have higher price appreciation in the future, or a higher profitability from their trades. Whereas if shorts weren't a part of this and there weren't the fluctuations and the volatility that we see, it would be much harder to actually take advantage of those ups and downs within a stock to find it at a discount or sell it when it's trading far above what the actual intrinsic value might be. So Cathie Wood with Ark Investment has been a big proponent of technology stocks and the new technology and innovation that's coming on the market. They've seen really big returns recently, mainly because they've been so bullish on Tesla and they've stuck with it throughout all the ups and downs that have happened. And they've continued to see large gains, especially in the last year when Tesla's stock has gone up so much. They also have a Bitcoin fund that they invest in and a few other emerging technologies that a lot of people think are too risky. So Cathie Wood is definitely an extremely intelligent investor, fund manager that you should be watching and listening to and learning from as well. Thanks so much for being here on Quinn Talks Money. I'll see you next time.